Welcome to TheoTrade. This is Don Kaufman. It's May 16th, 2018. You are watching the Theo Night video. Markets a little bit slow in terms of trade today. The S&Ps with just about 15 minutes left in the trading session are up 10. And I say that markets have slowed down. I'm not just proclaiming the move itself has slowed down, but ultimately some of the liquidity in the broader markets. If you take a look, again, with 15 minutes to go, people were only doing about 900,000 contracts in the S&Ps, which is incredibly light. So with this market kind of stalling out, what is going to drive the next move? And that's where I think I'm going to be able to shed a little bit of light specifically upon. First and foremost, if you're taking a look at the S&Ps here, and again, we have about 15 minutes left in the trading day. The S&Ps are off the highs of the session and slipping right now. One of the areas that's really causing a lot of the movement inside of today's trade happens to be none other than these financials. So we're going to look to the XLF considerably. We're also going to be looking back at the bonds and more notably the interest rate associated with the bonds. But the area that I really want to get into before I go over to financials, before I get a little bit into the bond market, I want to talk for a second about what I term the monsters of tech. Now, for those of you that are brand new, that you have not tuned in to many of our evening videos, let me bring you kind of up to speed a little bit on the monsters of tech. Now, the monsters of tech, it's not a real company. This is actually a symbol that I've created, and it's Facebook added to Apple, added to Microsoft, added to Google, added to Amazon, and it's ratioed together, okay, to create this kind of composite symbol. And one of the things that I wanted to show you specifically in terms of today's trade, if you look on a percentage basis, the monsters of tech right here on my watch list are relatively flat, yet with the Nasdaq up about 0.5%. Now that is extremely peculiar versus some of the recent trade. And what that effectively means is that Microsoft and Apple and Facebook and Google and Amazon, they are not currently driving the bus. And you can see there's some sell side activity right now. They just dropped by about $3-4, okay? And it's not necessarily reverberating into the Nasdaq. And the Nasdaq is waning a little bit as the trading session has kind of gone on. So one of the areas that I think a lot of people have their focus on is specifically in the Nasdaq and in these monsters of tech underlyings. However, the broader market, what it's about right now, has everything to do with the trade that's going on inside of the bonds and much more importantly, inside of the financials. And that's why I kind of led off with those financials. Now, let me bring you to precisely why. So you'd have to be hiding under a rock the last couple of days to not hear about interest rates, and specifically the 10-year. So the 10-year is above 3%. I'll show that in just a moment. But more importantly and more appropriately, let's look at the move just in the last 3 to 4 trading sessions inside of the bonds. So for those of you, if you don't speak bonds, bonds trade in ticks. Right? There's 32 ticks to a 1-point move. So the bonds, again, just a few days ago, were trading, well, 143 and 20 ticks. And here we are, okay, at 140 and 30 ticks. This is a pretty, again, monumental move to the downside. Now, as the bonds sell off, what does that effectively do to the interest rates? Okay, well, the interest rates take off to the upside, and that's precisely what we're seeing inside of the last couple of days. And again, you'd have to be under a rock not to have heard, all right, the 10-year has actually clipped through the fateful level of 3%. In fact, we're even approaching very close right now to 3.1%. Now, again, I know that some of you are a little bit newer that are tuning into this. That says 30.95. Yeah, but that actually equates to about 0.095. Again, very close to 3.1% on that 10-year. Now, here's the interesting thing. Let's move over to the financials, okay? Because, and I've alluded to this, this happens to be where the next market move is going to come from. And right now, that move does not appear to be a positive one. However, I'm going to give you both sides of this momentarily. So what we're seeing in the financials rally up with the rest of the market. Okay. Now you have bonds selling off. And typically when the bond market sells off, okay, the rates rise, which is precisely what's happened. Rising rate environment typically helps the financials. But look at the financials, and I'll zoom in very, very tight here. Look at the financials in the last 1, 2, 3, 4 trading days. Those are the same 4 trading days, okay, that the bonds have slipped. So right now we have rates, that's interest rates, exploding to the upside. Shouldn't financials kind of follow suit? And the answer is, well, they should. However, at this point, there's a complete and utter stall. Any continued sell-side activity inside of the bonds should, okay, trigger the inverse now inside of the financials. What I'm getting to, okay, is kind of a tipping point for financials, where financials, they love when interest rates go up. Why? Because there are trillions of dollars, literally trillions of dollars of your capital sitting, okay, in their accounts, and they can yield just a little bit of edge off of your money. However, there becomes this kind of tipping point here and an inflection point where the interest rates take off to the upside so quickly that it has, okay, the inverse effect on the financials, and that appears, okay, to be some of the case in the financials in just the last few trading sessions. So we should expect at this point continued sell-side activity in the bonds. And I got to tell you, okay, and I'm not a market technician, this looks like there's going to be continued sell-side activity, okay, to say the least, inside of the bond product. What you'd like to do here is open up even a 5-year kind of bond chart, all right, or 3 years, whichever you happen to be comfortable with. And anytime you look at bonds, okay, for a longer period of time, you want to come in and you want to do what's called contract adjust, okay, because it is a futures contract. Adjust for contract changes, hit apply, hit OK, and you'll start to get a feel for how critical the level that we're currently at happens to be. And moreover, rather than necessarily evaluating the bonds, okay, if you're not really comfortable looking at bonds or anything in the technicals in terms of bonds, maybe you want to go look at the TNX. And in the TNX, this is just the 10-year interest rate. You can see over the last 5 years on a weekly, all right, we're at, again, multiple year highs. So this looks to be, okay, kind of this large breakdown inside of the bond market that we've been looking for such a substantial period of time. In effect, okay, we believe that's going to have a bit of a ripple into the financials, taking the financials lower. The financials come off, that would be the pressure that we would look for inside of the S&Ps. Now, all of this may be coming to fruition inside of just the next day or two of trade. Everything resides, okay, right here in the financials. Yes, all this trade is reverberating out of the bonds, but when it comes to the S&Ps, focus less right now in terms of technology and much more on those financials. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.